Hey everybody, it's Pete. Welcome to today's episode of Stocks for Breakfast. It is Wednesday, April 15th, 2020. Got some really good follow through in the market yesterday. Hope you took advantage of some of the trades that we discussed. Today we're actually going to talk about, I got some really good questions from you guys today that I want to review because I feel like they're pretty important. They're actually good, really thoughtful trading questions. We'll kind of go off topic just a little bit so that we can cover your questions. I think it's very important that you feel like we have a part of a community and we can have a dialogue back and forth. If you like these videos, I would really appreciate it if you can click down and subscribe. You'll also get alerts by email, I believe, if and when the new videos pop up. The first question we got is, where did I get my French press? Early in the morning, we shoot these videos. I need to load that bad boy up and make sure I'm awake. I made a couple of mistakes. You guys called me out on it. French press was Bed Bath & Beyond, and then I believe Amazon for the second one. I just want to say thank you for watching the videos because your questions that are coming back are really insightful, which means that you really care about succeeding. We're not getting questions we're not getting questions about fluff. We're getting like, how do I manage my winning trades? What am I doing wrong in this situation? Those are the kind of questions when, if you watched the video a couple of days ago, I said there's this feedback loop of, research, strategy, trade, feedback, research, trade, and it goes in a loop. You put on a trade, you get feedback, you improve. You put on a trade, you get feedback, and you improve. And eventually, and again, if you bought Think and Grow Rich by Napoleon, not Think and Grow Rich, you're making mistakes already. Reminiscences of a Stock Operator by Edwin LaFay, which was written about Jesse Livermore. He basically says what I believe is one of the greatest quotes for any trader to learn how to succeed. And that's, as you start to trade more and more, and I'm paraphrasing, you eventually make a big list of what doesn't work. And as I said yesterday, when I talked about a trading journal, which is different than a tracking journal. A tracking journal is trades you're watching. A trading journal is you documenting your thoughts of what's going on so you can improve. He says you make a big list of what not to do, and what's left over is what works. That is so powerful, it's crazy. And I'm telling you for a fact, an absolute fact in trading, that's true. Because when you learn to stay away from the bad ideas, and again, we make a big distinction between bad ideas and losing trades. You could lose money on a good idea. You could lose money on a good idea, but that doesn't make it a bad trade. It makes it a trade that didn't follow through, which we've had a few of those lately, and we're going to discuss that in the long term about whether or not we think the market's going higher or lower. So anyway, my point is, I'm constantly talking about A-plus trades. Your A-plus trades are when you filter out all the garbage of those trades that you shouldn't be in the first place, and you only take your A-plus trades. That's where you allow your strategy to do the work. That's a beautiful place to be in trading because you get to the point where now you are not working so hard as a trader. You're certainly not stressed out of your mind on every single trade. And here's why. When you acknowledge the fact that the hard work in the trade is before you even get in the position, and we actually had a good question today about managing winning trades, and we're going to touch on that in a second. When you do the hard work before the trade, which means developing a strategy, testing your strategy, paying attention to what works and making small tweaks, and then you finally decide what your strategy is, and you say, this is what I'm going to the market with. Then you go in and you do your scans. And I mentioned this in yesterday afternoon's video. When I have a coaching student come to me and say, let's say we're in the private community and he's asking questions during the day, and he says, he or she says, I can't find anything. That's beautiful. I love when I hear that. You know why? Because that means that they're looking for something specific. They're only looking for their edge. When you get to that point and you say, it's obvious and I know exactly what I'm doing, it's just a question of which opportunity, or you say, I'm having a hard time finding opportunities, that's a great position to be in because now you're going to let your strategy do the work and you understand. I'm sorry for pointing. I don't know why I'm doing that. I feel like I'm actually talking to you. When you let your strategy do the work, you no longer try and make every single trade profitable. because quite frankly, every trade doesn't need to be profitable. I don't want to get into the percentages. Well, what percentage needs to be profitable? It doesn't matter. You could have a 90% winning ratio and still lose money because you give it all back on the one trade. It's not about win percentage. Yes, it's about probability of moving in a particular direction. That's where the edge comes from. I'm sorry, I keep pointing. That's where the edge comes from. Probability of stocks moving in your favor in the direction of your edge versus winning percentage is what you do after you get in the trade. They are not the same thing. They're different universe, okay? So the next thing I want to talk about is, for obvious reasons, I've gotten quite a few emails and comments about why am I doing these videos. Well, first of all, I love doing it. As I said, I'm doing this for 20 years. It's my life's work. I know trading's hard, and if I could give back, I am. And I love it. I love the feedback. I love logging in. I love getting emails. I love seeing what's going on. But I also, I have a coaching program. I've mentioned it several times. And if you want to take all of this stuff deeper and speak to me during the day and ask me any question you want and get my entire strategy, I have a business. So I'm not asking anybody to do it, but if you want to invest in yourself and take these conversations a little deeper, where you can ask me in real time as the market's unfolding during the day, we can do that too. So I'm not doing it because of that, but it's available. It's a part of what I do for a living. So I just wanted to throw that out there because I get a lot of emails of people wanting to get on the phone with me and stuff like that. And I do that for people in the coaching program. We have really solid, good interaction during the day as the market's going back and forth, where we actually talk about live trades and strategy and tactics and how you would get in or out of those trades. And then we also have weekly coaching calls where you can ask me questions at anything you want. And those calls go as long as they're necessary. And you have the archive to listen to all the other calls, and you get my entire course, my entire New York Method course, which is based on order flow and everything that we teach. And it's 24 hours worth of training. So, look, I love what I do, but I have 20 years of experience. If you want to tap into it, I'd love to talk to you. I mean, I love coaching. Like I said, I had 2 trading floors. There's no sweeter feeling for me than somebody who is struggling, turning around, and they're actually consistently making money. But there's only so much that we can do together here in these videos. I do feel like we're building a community, which I absolutely love. But if you want to take it a little bit deeper, just shoot me an email, and I'll be more than happy to send you the information. And then you can decide if you want to make that investment in yourself. It's very inexpensive to get started. But if you want, just send me an email. I'll leave my email below. So I want to get into questions and some comments that everybody made. First one was by Scott. He said he really appreciates that I talk about probabilities and if-then scenarios that become your A-plus trade. So Scott, I hope I kind of just answered that already. And I hope everybody takes that to heart, because again, my number one goal, you can see some of the books that I have behind me. I have tons and tons of books. I have library books. That's only a small, tiny portion of them. You could read chart patterns until your eyes can't stay open anymore. But really the bottom line is that's chart reading. You didn't open a trading account to become a chart reader. You didn't. You opened a trading account to make money. That's it. You opened a trading account to become a trader, not a professional chart reader. So what Scott's talking about here, probability, and you hear me every day, I'm not hedging what I'm saying. That's actually trading. Trading is, if this happens, then I'm going to do this, which fits the strategy. So for example, yesterday, we said we're looking for the market to remain long because that's what it's doing. But if it remains long, here's what we're going to do. We're going to be aggressive on the buy side, probably more share size, more positions, and hold longer. If the weekly chart in the markets starts to trade below Monday's low, then all bets are off the table. To be aggressive, you can still trade individual stocks long, but it's not an A-plus trade because the market is against you. So you have your A-plus and you start working away from that. So if-then scenarios is real trading. It's not hedging in case something else happens. That's trading. That's the real world of trading, okay? But I want to say this, and I'm going to get into a question by way here. Having problems, not problems, want to learn how to exit, and he was long AMD. the next stage of trading, after you have all of your strategy and everything like that, is really getting to the point where you learn how to manage your winning trades. Because I'm telling you flat out, and again, this is based on my experience, you need to first learn how to not lose money. And again, that gets back to that Jesse Livermore quote. You have to first learn to not lose money while you're developing your strategy and gaining experience, so you can be around long enough to get to the point where you learn how to manage winning trades. Because you eventually go like this and you get to a point where you're not losing anymore. You're not losing, you're not making, you're not losing, you're not making. And maybe you're at that point where it's super frustrating. We're like, okay, I'm done losing money. I'm not taking those big losses anymore, but I can't get profitable. I make money 3 days in a row, give most of it back, if not 2/3 of it back on one day, and I repeat this cycle. What you're missing is that last piece, which is how to make more on your winning trades. And really, that's really where we want to have more interaction. That's the point of the coaching program. So, Wei, the advice that I'm going to give you about managing winning trades really comes down to this. We've already discussed, and I'm actually going to share the screen, and then I'm going to come back, is essentially when you are watching your trades, you know that we discussed average true range. So average true range in AMD, for example, is $3.41. So generally speaking, again, generally speaking, and this is kind of, I say generally speaking, but it's how I actually watch the markets. I'll look for stocks, if they have a momentum move in their direction, to remain well bid for a stock going higher along, to remain well bid for 4 to 6 days, and maybe once in a while, 7 or 8, but generally speaking, 6, 7 days, right? Going in that direction as a momentum move. Now, the obvious question that you're going to have, right, is, well, how do you know if it's 4 or 7, right? It really depends on how strong the underlying market is and how strong the underlying order flow is in that individual stock. If it's the first time it's breaking out of a trading range, most likely it's going to be 4 days because it's the first energy out of that push. If you have an established order flow, 3-4 months worth of buying pressure in that direction, the odds are more money is being committed, so you can expect a little bit longer move. So let's just say that's example. Let's just keep it simple. So let's say 5 days. We'll go in between, right? 5 days, and ATR in AMD, for example, is $3.41. So let's just say it's $3 again, just for argument's sake, to keep the math simple. 5 days times $3 is 15. So if you're swing trading that stock, that's what it normally does. So does that mean if that's what your profit target would be, from looking at the chart to say, where did this momentum move start, right? From where's the low of that move in that first candle where it starts going, and where's $15 from there? The second way you can do, and again, if it gets up to 15, does that mean you automatically pull the plug? No, because it could go another day. What you do is you could tell it's early, right? What you do is you move up your trailing stop. Once you move up your trailing stop, you could either start to scale out, but as we've been noticing in the market, which was yesterday's call to be long, it could go further than we expected. So you move it up, or you exit some of the position. But you definitely want to move up a trailing stop, because remember, we're trading for what probably happens. And if that's where it reaches, that's where you should be getting out, or at least looking to trail the profit. AUY was a trade that was called out yesterday. That's now up 8 days in a row. The one other way to do it that is super easy and super helpful is have a separate chart for profit taking away from your normal analysis, because you don't want it to affect what you normally do, because it basically going to move a little quicker. Have a shorter term moving average, 2 shorter term moving averages. So let's say in this case, a 10-period moving average and a 5-period moving average. And the 5-period moving average be a exponential moving average that moves a little bit quicker. If and when the 5-period moving average, let's say it's going up, if and when a 5-period moving average crosses above and comes back and crosses below the 10, that will be the first place to book some of your profits, because the short-term momentum has now reversed, but you're also allowing it to keep moving as long as that remains intact, right? So you're not getting involved in every candle that bounces back and forth. So when the 5 crosses below the 10, that will be the first piece to get out of. And then when price action crosses below the 10, not the moving average, we have 2 pieces here. Price action moves below the 10, that's the first piece to scale out a little bit. And then when the 5-period moving average follows and crosses below, that would be the second piece. So really, moving averages, they move slower. Even though we're using shorter term ones, they move slower, but you can actually hold the trades a little bit longer because they are slower. But if and when they turn, those are some good signals to exit. Actually, John called me out, the SPY on one of the charts I was looking at on the weekly candlestick. I mistakenly said it was well offered. He said it was well bid. You're 100% correct. And again, it's early. Sometimes I do them early, or if I'm doing the best stock picks, it's in the afternoon. I'm exhausted from trading. So thank you, John, for calling me out on that. Good question from Marty here about trading futures versus trading stocks. There's a lot more flexibility with trading stocks. Because you could work orders a lot easier by trading smaller share size to get a feel for how the position's trading, meaning you don't take your full position until it starts to prove itself. The one thing I will say, though, is two things. They've just recently come out with E-mini micro contracts to trade futures, so you can have a lot less money invested per margin, similar to what you could do in stocks. So you can trade stocks, futures a little bit more similar to the way you can trade stocks, because there's smaller amounts you could buy without having to buy the whole contract that was $50 or $250 every tick. The downside, there's an upside and a downside. The downside is, what if the market is slow? What if the market goes in a pause, like I actually think we're about to experience now because of how the market just exploded to the upside for 3 weeks? I think we're going to probably pause the next couple of days. What if the market's slow? And then your business is shut down? That's the only downside. The upside is when the market's obvious, like yesterday, and we get these big green or red trend days, the huge upside is margin. If you know how to use it and you're disciplined, because of the leverage trading futures, you can earn a lot in a short period of time. So there's upsides and downsides. It's really just a question of up to you. I do trade futures when the market's super obvious, because you like to go in there and use that little bit extra leverage if you understand how to use it. So very good question there, Marty. Take a look. If futures are new to you and you're finding you don't have enough money to trade stocks, and you'd like a little bit more bang for your buck, take a look at the E-micro futures. They're pretty interesting. They just came out recently. RBR has a question about earnings season and going forward and trading earnings season. First of all, we're going to get a lot of volatility. We mentioned JP Morgan yesterday. Gapped higher initially on earnings and then got crushed. We're going to talk about some more financial earnings today. Look, I don't want the market to go down at all. There's a lot of people who have 401ks. It just feels like the world is a better place when the market is going straight up every day. But we do need to make a distinction between the economy and the market. And I'm going to give you a very astute example to think about, and it was actually from my fiance. It wasn't from me. She said, and let's say when the market was going straight up every day, we basically had this rocketing trend going up all the time. Not rocketing, it just didn't go down. We just kept grinding higher, right? And everybody was saying the economy's great, the economy's great, the economy's great because, and the world is a great place, and America is a great place because the stock market's going up every day. And if you had a 401k and it was going up every day and you make it 20% a year, yeah, that was good, right? But here's a question I want to ask. If everything was so great, but most of the country's living one paycheck away from losing their house or being in trouble, which you see a lot of that on Facebook, there's a difference between the economy and the stock market going up every day, okay? As an entrepreneur, I've been an entrepreneur since 1988. I love being in charge of myself, my own income, and I have businesses, trading one of those businesses, right? The world, and especially the economy, is going to be hurting in the second half of 2020. Earnings season is probably going to be the first part of diagnosing that. And again, if you looked at the JP Morgan earnings yesterday, it discussed company profits were not good. Trading profits were up. Think about that. So today in earnings, we actually have United Health, Bank of America, Citigroup, Goldman Sachs, as well as Bed Bath & Beyond. So that's actually something I want to touch on very quickly here, which was troubling coming into today, which was this. You have the entire S&P 500 exploding, but then you got this little sector over here looking kind of ugly, and then this one down here as well. So what do you think that means? Did we see the top yesterday of this rally, this really big move, which a lot of people are saying was the biggest bounce off the lows, I think, since the Great Depression. Or so, I don't know the exact quote, but a lot of people are bragging about how it rallied, because I don't care about what anybody else says. I only trade what I say. So anyway, RBR, it's a really good question. I think that, I think we can't ignore the reality of all the mom and pop businesses that are probably going out of business over the next couple of months. And it's really sad to see. It's a world that we live in right now. So you can only make that decision of how you're going to deal with your own longer term money. I'm not a financial advisor. I'm a trader. I don't know anybody here personally, but I think that the second half of 2020, when we come out of the world that we're living in right now, it's going to be tough. It's going to be tough. But we're traders, so we can make money off of that. Raul, good point. I want to bring up something I mentioned yesterday. We talked about well bid, well offered, and how I came up with that of my trading back in 2000 off of what was known as well bid, Goldman holding the bid. Raul actually called me out on it, which is really good. This shows you how much experience Raul has. If somebody was holding the bid or holding the offer and they kept buying shares as people were actively selling it to them, the terminology for back then was known, that person or that company was known as the AXE, A-X-E. So Raul, really awesome job of bringing that up. Now we're going to go right into the charts, and we're going to look at some opportunities for today. Thank you guys so much for the questions. So I'm going to close out this stuff. This is the last 2 weeks, so we're probably looking at a little bit of profit taking coming into. I think we're going to kind of go sideways and choppy in a couple of days. We're really going to have to be on top of our game. And again, I think it's nothing more than what we're looking at. It's really this year profit taking. I'm going to get back in there. And before we get into the whole thing, this is where we are in the futures market right now. You can see yesterday's close. So we do have some profit taking coming in. We have financial earnings today. Those are probably being priced into it. I do want to get first into what I believe are going to be the stocks that I'm going to be paying most attention to today. If we trade long, I do still like follow through in AMD, as Wei said, NVIDIA. And again, have your if-then scenarios. I do like NVIDIA breaking out here, but it's got to stay above yesterday's high, and Broadcom as well. We got a question, if between those two, I actually like NVIDIA better. We got a question about Microsoft today. I really like the breakout in Microsoft. What I don't like is 175 is resistance. So we kind of just traded straight into resistance. I don't like it unless we get above 175. I do like this a lot, but above 175 is where I personally would be looking at it. So what I'm looking for in Microsoft personally is for it to get up to this level, pause, because I do think the market's going to pause the next couple of days, if not trade a little bit lower, and go sideways around this 175 and then look for a move to 187.50. TLRY was another one that was called out by I want to make sure, Huba 211. Actually, this is interesting because the spike normally would be a short covering rally. And let's actually take a look at volume really quick. So see how different that picture just became in reading the tape, just adding in volume. So this spike here shows a little bit of new, fresh buying. And here's the point that I want to make. So I'm glad you brought this up. A fast rally like that is typically short covering, and short covering means after a prolonged downtrend, you get out of shorts. You have to buy back your shorts to get out of those winning positions. But that monster volume and sideways move, as opposed to monster volume and a pullback to test the lows, generally speaking, that push up and sideways means that now we're going to go into an accumulation phase. So I kind of like to keep an eye on this one, specific to that reason. So good call out to look at a stock. I generally don't look at stocks under $10. No particular reason. That's just I don't feel like they have enough volatility for me personally on a day-to-day basis. But as a longer-term position trade, this could be interesting. If I was trading it, I'd be looking for a break of above $9 to stay there. So I want to also get into the stocks that I feel I'm going to have the most attention on today, and that's these stocks. CVX, we now have an inside day, as well as ExxonMobil, which is, again, an inside day. If not, maybe we missed it by a couple of pennies, but not a big deal. So basically, those two stocks plus Caterpillar have extreme consolidation. I'm going to be looking for trend days out of those stocks today, explosions out of the consolidation, and then looking for a one-day strategy where they are a boom out of consolidation leads to expansion. Remember, I talked about that a while back. I learned that from Larry Williams, not a unique strategy, right? when the stocks consolidate, the longer they consolidate, the greater the move out of that. So CBX and ExxonMobil, 2 days of consolidation. We call that inside looking for a breakout. Exxon and Caterpillar yesterday inside as well. So I'm looking for the tech stocks to trade long and follow through today. If they don't, obviously we want to see them stay above yesterday's close. If they don't, you might want to move your trailing stop up. The financials look like we're going to get some follow through. Here's the key. If the market trades lower today and stays below the open, I might look at JP Morgan as a short tomorrow because we had a failed breakout, bad earnings, and got clobbered yesterday. So JP Morgan will end up being one of the stocks I keep an eye on today, as well as Fargo. As I said, Bank of America, Citigroup, and Goldman also have earnings today. So keep an eye on those. Have your if-then scenarios, and depending on which way the market trades, you should have a list of stocks heading into the day. So have an awesome day, everybody. Be disciplined today. Be safe, the number one important thing in our world today. If you have any comments, absolutely leave them, and we'll take a look at them in a coming video. So have an awesome day, everybody. Thanks for watching.